All right, what's up, guys? I wanted to answer some questions that people had in my chat of how to pick an option when I signal but don't include a strike price or an expiry date, right? Picking an option isn't as difficult as it sounds, and anybody, even if you have a small account, you could still get into these big plays. You just have to choose, an option wisely and not the money option wisely. So for today, I signaled a day trade on Netflix, right? I didn't include a strike price or an expiry, but that doesn't mean that smaller accounts can't get in. I know you guys know that these options, when they're in the money and out the money, they can cost, a lot of money, even if the expiry date is the next day. But let's look at the Netflix options chain, right? So Netflix, let's first look at the stock, right? Let's look at the stock. Netflix has the tendency to move $10 a day, $20 a day, sometimes even on rare occasions, $30 a day, right? So we know that Netflix moves big. And this is why the options chain is expensive, because they price in bigger moves, right? They already price in bigger moves. This happens, for earnings. When a stock is pricing, when a stock has an expected big moves after earnings, usually the contracts will get more expensive. But for just regular trading, we're gonna just go over regular trading and how you pick the option. Me personally, I like to pick options that are $100 or more, right? And I like to choose kind of I like to think about how probable is it for that stock to hit my strike price, even though I'll probably sell it beforehand, right? So Netflix, I signaled Netflix at around when it was around 388 a share, right? It dropped to 384 and I saw people up 35% still, just like this guy right here. If we go look at it, all right, I can't bring it up. But some guy in the chat, did pick an option without me having to tell him. He picked the 375 one. It moved $4 and he made 35%. Great play, right? Now, the reason why, no, he picked the 370, sorry. And the reason why it was profitable is because even though Netflix was at 388 at the time and he picked the 370 call, 370 put, the probability of Netflix hitting 370 from 388 isn't that, unlikely. It could definitely happen. Based on the technicals, it probably wasn't going to happen, but definitely the way Netflix moves, it could have happened. That's why he could have got a higher strike than me, than most of the people in the chat probably, and still profited off of it. But his contract was worth about $100, and that's exactly where I like to stay. $100 or more. That doesn't mean that people with even smaller accounts than that can go for. You could have went for a $60 option, but you just have to kind of think about the probability, right? How likely is it to hit that price by the expiry date that you choose, right? Even though, and you can still profit off of these plays. Now, I wouldn't really hold, like let's say I choose a 360 put, right? Um, and I have absolutely no thought process. I have absolutely no what do you call it? I absolutely don't think that Netflix is going to hit 360. That would be a bad play on my part, because the option expires tomorrow, and if I don't think that that price is going to hit by tomorrow, that would be stupid of me to buy that contract, because that can easily expire worthless, right? Same thing for swings. Let's go to like March 20th. If you're going to swing a contract, and if you're going to swing, let's say, calls, right? If you're going to swing calls, Netflix, as I mentioned before, can move 10, 20, even $30 in a single day. That's why these options, are a lot more expensive than your typical options. The more a stock can move, the higher the price the options are going to be. All right. So you could go for a higher strike. Let's say Netflix is at 378. It has about 3 weeks, I'd say, for it to hit, you pick, let's say 450, right? That's 21 days. Um, let's say it definitely won't happen, but let's say it moves an average of $5 per day during those 21 days. That's more than $100 move, which would have this option in the money, right? So you could pick that option if you thought that Netflix was going to go that high, if you genuinely thought that Netflix was going to hit 450, and you could still be profitable, even though this option is cheaper than all of these other options. But there's, the reason why it's cheaper is because there's less probability, but it's still possible. There's less probability it'll hit, but it's still possible. And that's why these options are cheaper. And for all the people in my chat that ask me, what strike, what date, hopefully this clears it up. For day trades, you could pick, these options, these close expiry options. For swing trades, I'll usually say a date for swing trades, and I'll say go a higher strike if you need to. But for day trades, typically, that's how you could pick an option, even if you have a smaller account. So hopefully this clears everything up for you guys. If you guys have any questions, just ask me, comment, like, subscribe, and thank you guys for all the support.